Hi, I'm Nick Spicer and welcome to this PortfolioMetrix quarterly update. The second quarter of 2019 saw further recovery after a difficult 2018. Global equity markets shared the fact that central banks were becoming more dovish, as well as a resumption in the US-China trade talks which happened at the end of the quarter. Global equity markets were up 6.5% in sterling terms over the quarter. The quarter also saw a further compression in global bond yields, as fixed income investors reacted to this more dovish central bank messaging, as well as weakening global growth. Global bond prices were up 2.5% over the quarter. The pound also weakened over the quarter, as the conservative leadership contenders all burnished their Eurosceptic credentials. This led to a weakening of the pound, as markets saw a slightly higher chance of a no-deal Brexit. Market performance. Global equities were up 6.5% over the quarter, bringing their number to a remarkable 17.1% over the entire year. The FTSE was also up, albeit a little bit less strongly, up 3.3% over the quarter, with 13.1% for the total return over the year. Emerging markets were up 3% over the quarter, bringing their total return over the year to 10.7%. Bonds, as expected, were more stable, but still up strongly, up 2.5% over the quarter, bringing their year-to-date total returns to 5.1%. So what about PortfolioMetrix performance? Select 4, our mid-risk portfolio, was up 3.6% net of all investment fees over the quarter. That brings its total returns to 9.5% year-to-date. Select 7, our highest risk portfolio, was up 5% net of all investment fees over the quarter, which brings its total returns to 13.7% year-to-date. So, looking forward, the overarching risk that markets are focused on at the moment is that of a global recession. Markets do see the risk of this happening imminently as having fallen, due to central bank leniency, as well as the resumption of the US-China trade talks. The fact that both of these have occurred could extend the cycle further. Brexit uncertainty, on the other hand, is at all-time highs. The chances of a no-deal Brexit, another election, or even no Brexit at all, these remain possibilities, although we would still argue that the most likely scenario is some sort of deal. No-deal Brexit, though, if it does happen, is likely to remain a local issue rather than a global issue. Faced with all of these, we continue to tweak portfolios for this late stage of the cycle. This means more value, less growthy type of portfolios, more limited exposure to small caps, and ultimately a focus on diversification, which is our protection in the case of uncertainty. Thanks for listening, and here's to a successful second half of the year.